let's look at this right now as today is the day. I'm going to start fresh, and we're going to create a game plan, and we're going to start working at it and creating a vision. Hello again, and thank you for joining us. I'm Robert Schein, a co-host of the Few podcast with Madison Evans. Hi, Madison.
Hi, Rob. How are you?
Great. We're going to have a great episode today. This is season 3, episode 2, and we're going to talk about mindset. And in practice is the title of our episode today. As you know, my 7 keys to financial wellness, one of those 7 keys is mindset. And so today we're going to take a deeper dive into that. So thank you for watching, and let's get right to it.
So, Rob, in season 1, we had an episode specifically about mindset, but it was kind of broad mindsets. We're going to go more specifically into mindsets around your financial lives. And I know that you have a top 5 list of how to have a great mindset in your financial life. Do you want to share more about that?
Yeah, so it's easier than you think, and it just takes a little concentration, effort, and focus. And if you take your mindset, financially speaking, number 1, you basically want to have a vision for yourself, financially speaking. So Madison, there's a very famous study that happened in the 1950s of a graduating senior class of an Ivy League school, Yale or Harvard. And they asked the seniors 3 questions in terms of their vision for their financial future. 1, do you have a financial vision for yourself? 2, have you written it down? And 3, do you have action steps on how you're going to achieve that? They did a follow-up study 20 years later with that graduating class. And what they found is that those seniors that answered the questions, and they had answers to 1, 2, and 3. Okay. So I have a plan, I have written it down, and I have a vision for my future, financially speaking. That graduating class, those that answered the question and had answers to all 3 questions, had more net worth than the remaining classmates 20 years later. And so building a financial vision for yourself is critically important, whether you stay on that path or not. It's like opening your mindset, right, to something bigger than where you are today. That's number 1. Number 2 is make certain that you're paying attention to your debt. Okay. Everyone has debt for the most part. Financially speaking, there's a strategy that you can create to attack your debt. So if you look at your high interest credit cards, go after those first. And make a strategy is to okay, so my car is locked in. So maybe it's a 5, 6, 7%, depending upon that. So then you can make a pay down strategy all the way down to your highest interest bearing debt to the lowest, and then just attack it. So a lot of people just go about paying their bills. No, there's a strategy to that. And that's what we talk about in terms of mindset. So don't be afraid of it. We all have it. Dig into it and attack it aggressively. That's the mindset. I think the message that I want to talk about in terms of mindset when it comes to don't ignore your debt. Number 3 is everyone should have an emergency fund, right? Because financially speaking, something always happens. In our household right now, we have 4 dogs, and I'm dealing with a dog that has medical issues, right? So you don't ever know what happens in life. So you should have at least 3 to 6 months of your paycheck, if you will. You take your earnings and your paycheck and put that in a savings account at a bank. So for what if scenarios of things that just totally unexpected that come at you, financially speaking. So that's very important to have an emergency fund. And number 4 is spend less than you make, right? And I think it's very important to, especially if you're really starting out, is pay yourself first. So my daughter just started a job at a college. And so one of the first conversations I had with her is, hey, start feeding yourself and paying yourself first in terms of financially speaking, because also, by the way, you're going to get a company match, right? You don't want to leave that 4% match on the table. That's free money. Yeah. And so that's important. So make certain that you always budget, but budget for yourself first, spending, and then your savings and obviously your essentials in between. But make certain that at the end of the month, if you will, you have that excess that you're basically spending within your limits, right? With what you earn. That's important. And so number 5 is don't put today's happiness in front of your financial future. So I literally just went to Starbucks this last week because why not? My wife loves pumpkin spice lattes. So I got her the pumpkin spice latte, and it's still 100 degrees outside right now, but it's good that we start early with the pumpkin spice. And I haven't been to Starbucks in a long time. The Venti pumpkin spice latte was $6.95.
Yeah, it's expensive.
I don't know if I ordered it wrong or they're charging $7.
It's expensive.
So we may have one, maybe two. We'll wait till October for sure for our next pumpkin spice latte. But like, let's save that money and let's think about our financial future, because let's put that in our pocket versus Starbucks pocket. That's ridiculous. Or figure out how to make it at home. That's even better, right?
Yeah, definitely. I agree. Thank you everyone for watching. This episode is sponsored by Schein Wealth Management. We've been in the Coachella Valley for 40 years and we're built for the next 40 years. You can find us at BlankyShineWealthManagement.com. And now back to the episode. Rob, going back to your first point that a lot of people don't have a financial vision for themselves, which is hindering their financial futures. What advice do you have for people on setting a realistic vision? I feel like that's something that a lot of people struggle with. For example, college is so expensive these days. You know that because you have 3 kids, almost 4 in college. And I think that one thing that's really important to consider before people go to college is having a plan for their career afterwards and how if they're taking out debt to pay for college, choosing a career path that they're going to be able to pay their debt back. And there's lots of examples that I think people just struggle to have a realistic vision for themselves. But what advice do you have on that?
It's a good question. I think that's great. I think it's again, financially speaking, everyone has something that they're going through. Doesn't matter if you have no debt, all the money in the world, or vice versa. So taking it back to mindset, you take it down to day one versus one day. So today is day one. I'm seeing this podcast. I'm seeing this episode, this reel, whatever. Change your life digitally speaking. Start liking and subscribing to a lot of those financial sort of outlets that will change the algorithm, that they then will start feeding you more and more financial advice, number one, because you want to change your mindset, right? You want to change your education, your literacy, and you want to build that. It's a muscle, right? You want to build that up. So I speak a lot about the financial mindset, if you will.
Right.
But then it's also then let's just start over and say, okay, I don't care what happened to me financially speaking last week, last year, or 10 years ago, or even, I just graduated from college, as you just asked. Let's look at this right now as today is the day. I'm going to start fresh, and we're going to create a game plan, and we're going to start working at it and creating a vision and so on and so forth. So it's not one day, it's day one today.
Right. I think that's great advice. So those are 5 great tips on how to have a better vision for people's financial lives. But specifically talking about people who are invested in markets, I think it's really important to have a good mindset about that too, especially in today's day and age where there's a lot of volatility and a lot of controversy in headlines. What kinds of mindsets do you think are important to have specifically about being invested in markets right now?
Great question. Number one is only invest what you're prepared to lose, right? That's like a number one mindset of like, okay, I'm going to save for my future, but if I don't need it today, again, your emergency fund setup, that's most important first and foremost. Number two, if you're an investor, volatility is like part of the entry fee.
Right.
Whether it's real estate, whether it's the financial markets, whether it's Bitcoin, right? Bitcoin just about every year goes down by 50% since inception. So like strap on the safety belt because you're on that roller coaster. Volatility is part of the pay to play when it comes to, so you have to have a financially speaking, a mindset of like, okay, this is not for tomorrow, next week, next year. This is like a longer term mindset. Then you get involved in investing. Case in point, the headlines are going to shake you every single day. I mean, we're in the world of 24-hour news cycle. And so whether it's, something that's a completely irrelevant, completely false, you're going through your social media and it's a incorrect headline, but it wants you to click on it. Right.
Right.
And then it's a wrong, I'm seeing that more and more today. Like clickbait is like all of this stuff is absolutely incorrect. Like I can't believe how much wrong stuff and how much time I have to spend on like verifying if it's true or not. Right. Or financial headlines. So if you watch any of the TV shows today on the financial networks, it's like breaking news. And then they have to stop the breaking news to break the news of breaking more news. Right. it's kind of like a Saturday Night Live skit. It's kind of hilarious. And so they want to be first on the beat. They want to basically, if it bleeds, it leads in the financial journal, and then the markets have to have that volatility or reaction, right? Today we're talking about interest rates and should they go down in September? Should they go up? Or the real estate market. So you just have to have a long-term mindset when it comes to investing, number one. And case in point, in terms of the headlines and what they're trying to basically, if it bleeds, it leads. If it's fear, they're trying to sell. I love this. I have this Life magazine cover in Madison. It's basically from June 5th of 1970. I'm going to show this to everybody. What's it say? What's the headline here?
Inflation, recession, and a frantic bear market.
Inflation, recession, and a frantic bear market. You could print this every single year of the stock market, even now, today, and moving forward. And they're doing this because they want you to buy this magazine. And the reality is that that's what the financial journals are doing.
Right.
And so you have to have a game plan, financial mindset of like, listen, I own quality companies. I own quality real estate, right? Real estate's about location, location, location. And oh, by the way, you make your most money in a bear market. You make your most money in a recession. You make your most money when you buy real estate, not when you sell real estate. So like literally walk into that mindset, have some cash on the sidelines, expect the volatility. The stock market, historically speaking, measured by the S&P 500, goes down by 5% 3 times a year. Okay. It goes down 10% twice a year. And sometimes every 3 to 5 years, we have a 20% drawdown, which is a technical bear market. Okay. So that's what you're in for. And oh, by the way, in real estate, it doesn't go up all the time. Right. And so there's a lot of things where you just have to understand the rules of the game before you start playing it. But know if you have a longer term thinking here, you're going to win in the long run.
Thank you, Rob, for that great advice. I think our listeners will get a lot of great tips from that. And closing the episode, we have a quote, like always, which is by Lao Tzu, and it reads, "Watch your thoughts, they become your words. Watch your words, they become your actions. Watch your actions, they become your habits. And watch your habits, they become your character. Watch your character, it becomes your destiny." And our second quote is by Napoleon Hill, and it reads, "Set your mind on a definite goal and observe how quickly the world stands aside to let you pass."
That's really good. So today's episode, we had a little bit of everything. One, it's all about mindset, financially speaking. At the very front end, it's all about if you have some debt, attack it, right? So from that standpoint. On the other side, if you're invested and you have financial assets, just see through the headlines of the day and stomach the volatility, turn it off, know that you're invested in quality. If you're not, and you need a question of like, where do I go from here? Find a financial professional. We're accredited investment fiduciaries. Find a fiduciary that can help you look over your investment portfolio, if you will, or even your real estate assets. That's key and foremost. And so maybe you could partner with that to sort of help you sort of sift through some of the financial headlines of the day of what actually is reality, what actually impacts your portfolio, or what truly actually turns out to be an awesome opportunity for the financial future of you to make some great money ahead.
And as always, please like, subscribe, and share this episode with someone you think would like it. And stay tuned for season 3, episode 3.
This podcast is brought to you by David Field, producer. It is produced and directed by David Field and Kristen George. And its mix, edit, and socials by Kristen George. Schein Wealth Management is a group of investment professionals registered with Hightower Services, LLC, member FINRA and SIPC, and with Hightower Advisors, LLC, a registered investment advisor with the SEC. Securities are offered through Hightower Securities, LLC. Advisory services are offered through Hightower Advisors, LLC. This is not an offer to buy or sell securities. No investment process is free of risk, and there is no guarantee that the investment process or the investment opportunities referenced herein will be profitable. Past performance is not indicative of current or future performance and is not a guarantee. The investment opportunities referenced herein may not be suitable for all investors. All data and information referenced herein are from sources believed to be reliable. Any opinions, news, research, analysis, prices, or other information contained in this research is provided as general market commentary. It does not constitute investment advice. Schein Wealth Management and Hightower shall not in any way be liable for claims and make no expressed or implied representations or warranties as to the accuracy or completeness of the data and other information, or for statements or errors contained in or omissions from the obtained data and information referenced herein. The data and information are provided as of the date referenced. Such data and information are subject to change without notice. This document was created for informational purposes only. The opinions expressed are solely those of Schein Wealth Management and do not represent those of Hightower Advisors, LLC, or any of its affiliates.